Hi everyone, it's Hadar here. I'm just standing outside my first investment property here. It's a 4-unit apartment building, and I would like to share with you an answer for a question that I get a lot from budding investors. How to start in real estate investing, multifamily investing to be specific. I would like to share with you a secret by the end of this video that will really be a good option for you to start in real estate in a very cost-effective way. The first thing you need to do in this test will be to stabilize your financial situation. So you really want to talk to a mortgage broker or your local bank, your local lender, to try and stabilize what you can afford and within what price range you're able to get into the market and buy. Are you qualified for a loan up to a certain level? Can you qualify for a first home buyer grant loan in a low interest rate with a very low deposit? Ask those questions from your local lender. Stabilize your price range. This is the first thing you need to do. And the other thing will be to choose a market. Many markets around the country, around the US, are markets which offer a very high prices at the moment. So some of them are not affordable. And if you're looking to invest in multifamily specifically, you might want to consider moving into a more affordable market in opposed to operating from out of state. This is just something that you might need to do to sacrifice to start growing your portfolio and starting your real estate investing business. So choosing a market, doing a research on the market is very, very important. There's some other sources and videos which I share specifically on my website. If you want to check it out, you can sign up for our educational newsletter on mfiholding.com, holding with no S, mfiholding.com, and you'll receive some articles about that, how to research a market. The third thing, you need to decide on your buying criteria. So you really want to establish what type of asset are you looking to buy. Are you targeting small multifamily, large multifamily? Are you looking to buy properties which are a specific year? For example, I like to buy apartments which are maximum built in the 1960s. I will not buy anything which is older than that. Preferably, I would like 70s and 80s. So you want to decide on that, what vintage the apartments and the construction, when were they built. Really, really important to decide on the age and type, and also what kind of returns are you looking for. So you need to establish what kind of returns are you looking for. Were you looking for a certain cash-on-cash return, certain cash flow per door, and of course that leads to another point which will take you into deciding on that, which will allow you to achieve your financial goals. So it all ties in together, but starting with those points is very, very important. And point number 4 is building your team. So you want to be in a position that you have a good team on the ground, you got boots on the ground, whether you need a maintenance guy, somebody to take care of your repositioning of your rehabs, and also, of course, the most important team member when you're starting up is your property manager, especially if you are out of area and you are not looking to manage your own portfolio. I'd rather chase the deal. I enjoy putting the deals together and negotiating and helping other investors to achieve their goals, in opposed to being busy with dealing with tenants and managing the tenants. So using a property manager is great. You can also leverage their expertise, the local knowledge, while you do the research when you're choosing a market, and you can also use their contacts for establishing good relationship with tradies in the area that you can use to improve your properties. And point number 5, which is highly recommended, is basically seeking some education, whether it's listening to podcasts, whether it's reading some book, jumping on Bigger Pockets, researching over there and asking questions, or perhaps searching a mentor or a coach, which will certainly shorten your timelines to success, and you can learn from their mistakes and leverage that towards your financial success. So now I'm going to share with you the number one strategy for a person who wants to move into a multifamily investing, whether you are from single family to multifamily or whether you want to start out straight into multifamily. The recommended strategy is house hacking. House hacking is basically buying a fourplex like that, or even a duplex or a triplex, and living in one unit and renting the rest. Basically, the rent that you receive from the other rental property within your apartment building will cover your mortgage and also will give you an additional income. So that's a great opportunity to start, and you become serviceable and bankable by the banks, and it's a really good thing to do because 1 to 4 units is classified as residential. So basically 2 to 4, although it's multifamily, you can get a conventional lending with very long amortization, 30 years, and 30 years fixed rate with a very low down payment if you're moving to move into that building as a home buyer. So house hacking is very, very good strategy to start, and there's nothing wrong with starting small. You put your foot in the door at a very affordable rate. So here we go. Feel free to visit me on mfiholding.com for any additional education information. If you want to reach out to do a strategy session with us, also feel free to reach out. You'll find the link below, and check it out. Make it happen. Remember, make it happen is very, very important. Thank you, and have a lovely day.